Good morning, everybody. You are coming on 3 a.m. over there on the East Coast, Wednesday, January 3. It is 89 degrees where I am right now. So, for all of you who have snow, Wednesday. Today we have a Fed speaker, 8:30 in the morning. Fed barking. Who cares? We have the JOLTS job openings. We have jobs coming on Friday. Don't forget, jobs report on Friday. At 2 o'clock today, we have the FOMC minutes. And many of you are kind of wondering how and why yesterday's rug pull took place. And if you recall, in the middle portion of November, we started to rally because they were pricing in rate cuts. Those rate cuts all went to complete shit and started declining on the forecast of rate cuts that they are expecting this year, which they are not going to get any because, take it from me, you will see rates get hiked this year. So, quickly going over yesterday before we go over what we're looking forward to into the portion of today, Wednesday, and into the remainder of the week. Big gap down over on SPX, and what a piece of crap. 24-point gap down, a 31-point range. Oh, forgot to color code that. Closed red, 2 red closes in a row. Nothing significant, but much more important than your multiple green closes in a row. And we are down on the year, minus 0.05%. This 10th consecutive green weekly candle, which has not happened since before even I was born, back when Kennedy was president in 1963, is on the table with a close above 47.45.20 on Friday. I want to quickly go over the spreads. We'll do the spreads first, and we'll go into the alert part. Monday, this is Monday. I threw out the trade after the futures had opened, how you could go for the January 5, 48.05, 4800, which was getting $1.90, or you could go on to yesterday's 48.05, 4800, which is getting 70 cents. And again, for those of you who are going, how do I trade that? Well, you do it with Interactive Brokers. Interactive Brokers will let you trade 23 hours a day, whereas your typical mom and pop out of the U.S. brokerage firm, Tasty Trade, Thinkorswim, Charles Schwab, E-Trade, Robinhood, they want to confine you the same thing as having a job, is you make money for them. It's not their job to make money for you. Interactive Brokers lets you go out and do that. Just after I threw out there for Finman, because Finman loves getting that money. The 47.90, 47.85 calls, you get $1.70 there. That was on Monday night when the markets were still closed. All of you guys had your hangover. And like I said, 47.78, end of the world. So as we went into the open, which they really started selling just after I put out that email yesterday. Overnight calls, all money. 47.90, 47.85 is down to 20. Very obvious that they closed out full credit. And going into the morning, again, just sticking to charts, nothing but charts. Buy the 47.30 puts, sell the 47.35 puts, you're getting $2 at the moment at 8:30 in the morning. Boom, 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 safe edges after they came out. Roll on down. You're in the chat room. You know how to scroll. And there at 10:43 in the morning, I was telling you, hey, man, it's only a 14-point range. Look at how we're down here. Look at how we're down here. 12.35. Your 47.35, 47.30s were down to 40 cents. Then they were back to $1.50 as you started going into the degenerate hour. And it was at the time. Closing today above 47.30 is going to be very difficult. Nothing to lie about that. JP Morgan, I'll go over in a little bit. But then here at 3 o'clock, like I shared, going into the close, you have the VIX barely above 1339. You got the NASDAQ down 2%. SPX never, ever touched minus 1% yesterday. You got these big, huge buy divergences on these oversold 1 hours, and you got an oversold 4 hour. And what wound up happening is, as you saw, you wound up closing with that little pop there from 3 o'clock into the close up in the 4740s. That dip down below that 4730 area into this 4722.67, pennies off of minus 1%, allowed for that 47.35, 47.30 credit spread to get up into the 350s, almost into $4. And you wound up taking that full credit into the close. Now, kind of going over a little bit on how the other side of the day worked. 9:58 in the morning, 0DT dip buyers, SPX 4750, that's your primary focus, not 4770. 11:30 in the morning, 4756, that's your number one focus. 4770, the gap fill. Curb your FOMO about this today. Bear Stearns is fine. An hour later, I'm showing you that 4756 is already here. Is this it? No, that's not it, but this is it. And yeah, your 4750 calls. Off the morning, 340, you had a little pop up here to a little bit better than 550. Then off of that dip that you had down there, right here was the second alert I put out talking about 4756. You had to run up to $8. It's not rocket science. If you really want to go out there and put on your, fucking focus goggles and zero DTE scalp and trade like probably a couple dozen regular members have been doing for years, it's pretty simple to go out there and grab it. On the other side to that, and some of those new guys are going to go, well, how am I supposed to decipher this? Yeah, what does this mean? I don't know. And that's because it's your first fucking day. Your first day when you went to school, you didn't start hitting on fucking chicks. You took some time. You chilled back. You figured out, how to get some fucking smoothness in you. And after a couple of days, couple of weeks, some people a couple of months, some people never got the balls to do it because they just didn't have it. Then you started to develop your smooth. Well, guys have been with me for 8 years now. And like I posted here, 3 o'clock, going into the close, the VIX is barely 1339. NDX 2% buy divergence on the oversold. And over in the chat room, I went over there and I posted that, hey, watch that 4738 as we go into the close. And when I put it, it was 3:09 p.m. These 4735 calls were 65 cents. And lo and behold, on that pop up there to $9, they went 1,300%. They wound up closing at $6. Just a little bit better than 850%. $65 a contract, closing at $600 a contract. So if you live over in a little one-bedroom apartment with, a very, very tight budget and you're trying to make $25, $50 a day and you just can't whack it selling candles on Amazon, you came to the right fucking place because you can take those tiny little trades because that's what the whole idea of zero DTE is. You don't go out there and do 50, 100 fucking contracts. Not unless you've developed yourself and you've been taking money from the casino for a couple of years. Like on our SQ32 trade from a week ago. Put out that trade there at 3.25. And as that 30% came in on the very next day on Friday, there was your 30% target. Completely up to you what you'd like to do. Want to take it off? Take it off. Want to ride it? It's good until January 19th. You're already in the money. You just got your dip. I've given you your drop points and your pivot points on it. Well, you came down yesterday. You broke that 74.42. You wound up closing down below $72. These are now up 173% within a week. So, on the spreads yesterday, the 47.90, 47.85 risk, a little bit better than 50%. The 47.30, 47.35 puts risk. Again, you could have gotten $2, you could have gotten $2.50 or $1.50, you could have wound up getting to $3.50 later in the day. 230%. Wouldn't be hard for anybody or their dog to go out there and go and get 25, 30, 40% on a trade like that if it's the kind of trade that you like to do. So let's get into the charts because that's where the simplicity really starts to show itself. SPY, 15-day fake print. Don't forget that fake print is there, and there is another one, don't forget, way down there below 409. 15-day chart over here, we have not come to that gap from a week ago, whereas SPX dropped down to 46.97, which is your first and primary break zone. Here is your SPY gap from over the weekend, which I have not highlighted how high we got into, but it doesn't take a zoomed in view to see that you have a pretty clear looking 1, 2, 3, 4, 5 over here on this. However, this took place during the aftermarket, thus would not put it together on SPY, and I am not putting it together on the SPX. SPX over here, what worried me is how quickly we were able to get oversold on the 4-hour. After having that sell divergence that we were running into all through the second half of December, well, very quickly, little dip like yesterday, not even getting minus 1%, and we wound up getting oversold. So here on SPX, I'll show you here on the same view, and again, very much could be in line, where you have a decent ABC 1, 2, just enough 3, 4, 5 could be completed, should be completed. 4-hour chart says that move is completed. So the retracement of this drop, getting a 50 retracement, very simple, should take us right inside the gap where a perfect retracement would take us right back up into filling that gap. Wouldn't put my money on it, but yeah, somewhere up here in the 47.58, 47.70 area, we should wind up filling this gap. Should is the clear word, should. Do I think that that is a trade to take a bounce because we are expected to go up here? Well, you've got your upside risk of 25, 30 points versus you call it whatever the fuck you want to call that. SPX 4-hour, like I said, that was the primary reason. Look over on the 30-day, on the 1-hour, and as you could see as we were coming in yesterday, you had a pretty clear buy divergence over there on that 1-hour. So that's why you got your bounce. So on to the NDX, and the NDX, because the NDX is what got you here, the NDX is what is going to take you away from here. And on your bounce, coming off of October, 1, 2, 3, 4, very clear, failed 5, right up there. Very, very clear, failed 5. So on this move down, which I'll zoom into a 15-day, this right here, this area, I'll do whatever the hell I got to do. This spot right there, that is your SPX 46.97. The NDX already took that out. So we have an advanced wave on the NDX as compared to what's happening over on the SPX. So looking at your view here, coming off your full moon, perfect. We've got a pretty clear 1, 2, 3, 4, 5, right down to almost the 200 extension, right down to the 20-day moving average. And like I shared over there on the other chart, 4-hour here, looking at the QQQ, extreme oversold. Extreme oversold. So it is much in line that we should be getting a bounce, and our bounce should take a couple of days I don't think it's going to take a couple of hours and bring us back up into the gap from over the weekend. Somewhere up above yesterday's highs, maybe today, maybe on Friday, maybe we get a 10th green week in a row. Don't know. Personally, don't really care at this moment because all the focus is and should be going much, much further out because of your VIX. So yesterday we got our VIX right on up there into that 14 plus area. And that was where you started to get a little bit concerned because you got up into the 14s. Uh-oh, that's a little bit too much. And you faded right off and you faded into the weekend gap, got your little pop above 1339 right at the end of the day when you had your little shaky shake on this SPX to that 4722. And then all of a sudden, right back down. When the VIX is going to be down here in this 1339 and below it, we're getting dips. Dips that are going to wind up getting bought. Dips that are going to bounce. When this ends and the 1339 is no longer around and we're up in the 14s and we're pushing up into the 16s, you bet your fucking ass all of you that are in the March, June, September, December put positions are going to be laughing. And I won't be getting any more questions about little dips like yesterday asking, should I take my trade off? Should I make adjustments to it? Because you got a much bigger picture in front of you there, buddy. And it is going to be one hell of an election year, first 6 months of the year, which happens every election year. Happy Wednesday, almost 90 degrees. I'm going to turn the air conditioner on and take a nap. See you guys in the morning.